Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. We are on Tuesday. The markets are a bit disappointed with this tariff deadline by the US of an additional 25% costs imposed on Indian merchandise exports to the United States being formally notified August 27th. 12:01 a.m. The markets have taken this on their chin. 24,800 is where the bulls are battling bears. As far as prices are concerned, the index down about 165 points. And of course, you have a strong sell-off that is coming in stocks such as the Bombay Stock Exchange, 3% down for you. 2221, there is weakness in HDFC Bank, down 0.7%, Infosys slipping 0.66% lower, 3% downtick on Shriram Finance at 3602, and similarly all large caps not exactly in the pink of health. Look at Sun Pharma, 3% lower at 1602. To decipher the state of play as far as the Lal Street are concerned, we are now joined by Mr. Sunil Shah. He's the fund manager at SRE PMS, a very quiet, introspective man who believes more in research rather than speaking about it. Nevertheless, is a phenomenal stock picker and has been our guest very often. Namaste to you, Sunilji, and a very warm welcome. Against this background of despondency, continued FII selling, and of course this effort by the government to pump prime the economy, how do you see the sentiment on Dalal Street at this point of time?
Yes, thanks, Shailji, for getting me on the show. Thank you very much. Yes, a good afternoon for long-term investors. Maybe not so great day for people who look from very short-term point of view. Clearly, now the market is unhappy about the tariff which is coming. That's what it is all about. So let's look at the market from two different angles. We have had one phase earlier, which was the COVID phase, which lasted maybe almost about 4 years. And now we are into this Trump phase, which is also a 4 year phenomenon. Uh, at that point in time, also, we had marked so much uncertainty. So
I think there is some issue with the link. We'll try and set it out again. It's heavy rains in Mumbai and heavy rains in Delhi as well. So the telecom networks are not speaking to each other. Meanwhile, what we'll do is I'll give you a round out on how stocks are performing. So because of this GST rejig which is planned, in which costs of cars, costs of two-wheelers in particular is likely to come down. Look at how record highs are hitting on Eicher Motors and Maruti. 6195 on Eicher Motors, maker of the iconic Bullet bike, 3.4% higher as far as Eicher is concerned, and Maruti 3.1% higher, 14,800. Strong moves coming in on both these counters. Sunilji is back with us. He was describing his views on sentiment on Dalal Street. Sunilji, over to you.
yes, sure, Shailji. So yeah, I was just talking about a phase, which was like a COVID phase, a 4 year phenomenon. And now we have this Trump phase, which is also a 4 year phenomenon. Both the phases were uncertain. Only thing was that during the COVID time, world was flushed with so much of funds, liquidity was abundant, and we are coming from a low growth area. Now in the Trump phase, the liquidity is a question mark, and growth will be low. So we are going through challenging times on that side because of this tariff. Business community cannot really plan their manufacturing schedule to that extent. And that is what is going to see a low growth phenomena across the world coupled with low liquidity. So the way in which market has delivered returns in the last 4 years or so, it might not be the case going forward. We have to be very careful about it. And also what Mr. Trump is trying to do is to get manufacturing back in US. Now, that is not something which is an easy thing, given that US attracts the best of the intellectual capital in the world, and those intellectual people come at a price. So it's not going to be cheap for them to get into manufacturing overall. So even if after a 3-year period, we will certainly such kind of reversal of things which will happen. So I think market is taking it a bit unhappy or scary type of thing. Having stated that, for India per se, the exports that we do to US is about $80 billion. So it's not a big amount of money, which is from a country's GDP point of view. It's about 2% or so. So that's not a big number. And also, the world is moving from global to local. Worldwide, if we see, every country is trying to protect the local economies. So I think from an investment point of view, we should look at something which is the so-called Atmanirbhar, or companies which are make in India, buy in India, sell in India. Those kind of companies should be there on the radar rather than companies which are connected to the global market. So, Shelji, that's the way I would try to keep on finding opportunities to invest in India. I think that should be the way forward for all of us as well. Yeah, Shelji.
How is an equity researcher like you looking at this GST rejig? What are the potential winners in terms of stocks, and who could you think would be uh, stocks that might take it on their chin, suffer badly because of higher GST?
Yeah. Shailji, so government is really trying to revive the economy. We are going
Yes.
through one such slowdown phase, and we are clearly reducing the GST rather than going to increase the GST. So there are many pockets where we have had high GST rates, and those are likely to come down. Coupled with lesser price of the products eventually, maybe around Diwali time or so, we will also have increased money purchasing power in the hands of people because of increased incentive on the direct taxation front. So both put together, I think consumption is a theme which one has to watch out for. And you also have a regime of lowering of interest rates. So maybe automobile, auto ancillaries, consumer durables, those are the packs which will clearly stand out. And we've seen that despite market correcting, the auto pack is the one which is really holding the grounds, auto and auto ancillary. So those are the pockets where I think a lot of money making opportunities will be there. Also, the way which I'm trying to look at is, given that increased disposable income is going to be there in the hands of people, it's the financialization theme which will pick up. More money will get invested again in the markets overall, where we'll see, AMC kind of businesses also likely to do well. So those are the pockets where we will see good growth going forward.
Okay, fair point. And in terms of autos, we've had, after many, many years, a fresh record high on Maruti as well as Eicher Motors, primarily driven by this expectation that small cars and bikes will be a little more inexpensive compared with what they are now. Uh, are you in sync with this argument? And if yes, uh, does after many, many years these breakouts make sense to you as a value buyer?
Yes, Shailji, so clearly, as you correctly mentioned, market will look at the first rung of stocks, which come like Maruti and Eicher. But for somebody one step backwards, if we look, there are auto ancillary companies which will also play a big role. And there also something like an Uno Minda, a company which is in the auto ancillary space and is linked very much with the EV opportunity as well as Maruti itself. So that kind of companies also should get recognition in one's portfolio because they are relatively mid cap, and then the percentage appreciation becomes better in such kind of companies. So maybe Uno Minda is one such company, and another one which, if I can share, can be a Gabriel India. Now, Gabriel India is going to a major restructuring within the group itself, where they'll be merging a lot of their group companies. So I think the turnover of the company is likely to almost from a 4,000 crores is likely to be about 12,000 crores purely from consolidation of their businesses. So which is a 3x kind of a growth in next 4 years or so. So I think those kind of companies like Gabriel and Uno Minda should be a play which one can watch out from the second rung of auto ancillary opportunity. I think that's what one should look at, Shane.
So, Uno Minda is also amongst the very few stocks, ladies and gentlemen, which is at a record high today, 1288. and hold your breath. In the early part of August, which is actually 13th of August, Uno Minda was at 1065. So, this is an earnings led growth that has come in, and you see the stock moving 20% in the last 5 or 7 trading sessions, and of course RPCR shows you a wonderful move over the last 1 year or so. Stock has doubled. Ditto Gabriel, record high on Gabriel as well. The company announced about a month ago of a restructuring in its main businesses, where unlisted subsidiaries would be merged into the main listed parent, and this is the kind of gain that has happened, 132% in the last 6 months. Remember, last 6 months for the market haven't been all that well compared with the kind of moves that we've seen. So, of course, Uno and Gabriel are your picks from the auto ancillary space. Sunilji, at this stage of the market, it's a stock picker's paradise, as you mentioned in your opening comment. Pain visible across sectors, pain visible in stock prices. Look at one of your favorites, Bombay Stock Exchange. I remember talking about this stock a lot with you, and we've seen somewhere like 3000 post 1:1 bonus all the way down to 2200 now. Is this a value buy at this point, or are we staying away?
Yeah, Shelji, I think relative valuation of BSE will come into play. The market is now also available for an NSE, which is now available in the unlisted domain, but even retail participants can park their money into that company very relatively easily. So on a relative valuation basis, BSE even at this price would be expensive compared to an NSE. And also, we have seen recent clampdown from the regulator for the volumes in the F&O space which happened. So this calls for a price correction, and as I stated, BSE would be comparatively still richly valued to an NSE. So I think perhaps from an investor's point of view, earlier when NSE window was not open, BSE was the only choice and people are investing there. Now that that window is open for everybody, people are perhaps looking at an alternate as well. So I think BSE maybe could be a pass, and maybe one can look at a twin holding of CDSL and NSDL. That can be a proxy to the entire financialization theme, and those are still undervalued compared to the exchanges. So I think that's a play which one can do relatively in terms of investments in the markets. That's the
Sadly, we
thought process.
cannot show you the NSDL price because it's listed on the Bombay Stock Exchange. But Sunilji, your view on NSDL in particular, I'd like to understand your thesis on NSDL. I remember CDSL has been one of your favorite stocks along with CAMS. These are all the back end of this financialization theme. Now, how are you looking at NSDL? I'll just check the price and inform our viewers. This is at 1247, ladies and gentlemen.
Yes. So, Shailji, I think the entire theme remains in terms of both the players to be a part of one's portfolio. It's not selecting one or the other. The reason being that with time you will see one stock give a good amount of return over a 6 months or a 1 year period, and the other catch up will certainly happen from the other players. So rather than picking one at any point of time, it's better to play 100% of the available opportunity by investing in both the companies. Now, NSDL, the IPO, which had come at about 850 rupees or so, and is quoting at about 1200 or so, I think the price is reasonable enough, and one should, maybe park in both the companies to really capitalize rather than picking one of the two and then see the other one go up. So I think that would be more prudent rather than to select any one of the two.
Okay, let's get the long term chart of CDSL. Uh, I think this is a 1:1 bonus or 5:1 split.
It's 1:1 split.
है ना?
Bonus.
Right.
1:1, which has happened for CDS. Yeah.
Correct. So, effectively, this is a 3000 rupee stock in terms of value, and somewhere in 2020, this was going begging at 200 rupees.
Yes.
and we've had a 15x, ladies and gentlemen, on CDSL. So please note the kind of wealth that has been created, and NSDL has recently got listed. Now, Sunilji, NSDL handles the institutional part of the business of dematerialization, which is 80% of volume, and CDSL looks at retail. Am I right?
Uh, yeah, NSDL looks at institutional on the contract part of it.
Yes.
Plus, there are a lot of large cap unlisted companies which are in the fold of NSDL. So, whenever those large cap companies get listed, which are from the government side, NSDL will have a role to play. CDSL is a proxy of the retail participation in this entire, online brokers which have got strong foothold in the markets. So hence I'm saying that one point of time you might see good companies coming getting listed and NSDL getting fancy in the market. On the other side, you will see retail participation pick up if the market is really becoming strong. So the business model, given that both of them are depositories, are one, but underlying their classification of their clients is significantly different. So you will see run up in one at one point of time. Hence, I'm trying to say that it's better to play both of them rather than pick one of the two.
I think that's a very practical advice for those who've made money in CDSL. They may want to sell a part of their CDSL holding and diversify it into NSDL, and those who still feel that even after a 15x rally, there is steam left in CDSL, then why not enjoy both? I have a lovely correlation right here in front of me. Maybe I'll share it on my uh, Twitter feed, and also list and also tag Sunil ji on comparisons between CDSL and NSDL on net profit, net margin, ROE, PE, and price to book. Ladies and gentlemen, CDSL price to book is 16, NSDL price to book is 4, and CDSL return on equity is 30%, that of NSDL is 18%. Be that as it may, you will see the entire jing bang on my Twitter account fairly shortly. So these are interesting thoughts that you are sharing with us, Sunilji. What else apart from Gabriel, Uno Minda, NSDL and CDSL looks attractive to you at current prices?
Uh, Shelby, so as I stated, we are in a bottoms-up market because the liquidity is not what it was in the past. We'll not see a rally across the market across all stocks. So we'll clearly see companies and businesses in which there is some underlying factor or reason for a change. Now, one such company that I'm evaluating, looking at is India Shelter Housing.
Okay.
India Shelter Housing is also an NBFC which is in the business of housing finance, which apparently sounds like a commodity type of a business because there is nothing which is differentiating product wise in terms of one player versus the other. Having stated that, I think in India Shelter Housing Finance, for people who have been in the markets for a long period of time, know a company by the name of Grow Finance. Gru Finance was a subsidiary of HDFC, and that eventually got merged with Bandhan Bank.
आपने आपने दुखती रग पे हाथ रख दिया है.
Sir, Dukti Rat to hai because people like
Everybody
you and
misses
me
Grey
don't
Finance.
exactly the point, sir. So I think the man behind Gru Finance was Mr. Sudhin Choksi.
Yes.
And Mr. Sudhin Choksi, world knows Mr. Deepak Parekh. Few quality investors know Mr. Sudhin Choksi. And he is the chairman of India Shelter Finance now.
Okay.
I think that sums up a lot on this company, given that Group Finance, the way in which they have done phenomenal business in tier 2, tier 3 cities
Yes.
and maintaining ratios exactly like HDFC. So if we dwell upon India Shelter Finance in more detail, we'll come across a revised version of a Group Finance.
Okay.
So I think that's the one to watch out for. Clearly, 15% rate at which they are lending, 6% NIMs, 1% NPAs, extremely strong growth potential, 30% growth in AUM year on year. So the person who has built Group Finance is building India Shelter Finance. So
Okay.
I think with that point of view, one should look at this, where it's a pure bottoms-up opportunity and a stock picking that we can do there. So again, people can make their own analysis, but that's the thought process which I have, Shailji, overall on a stock picking opportunity.
Okay. When was India Shelter listed? About 2 years ago, right?
Almost that kind of a time period.
Okay. And let's just look at the India Shelter IPO price. Okay, so it got listed, ladies and gentlemen, somewhere in early part of 2024. The price was between 470 to 493. Let's presume it's 493. We are looking at India Shelter Finance PCR. I'm wondering if, yes, perfect. Yes. Kindly show us the long term charts as well. So, this, ladies and gentlemen, is an interesting thought as Sunilji is sharing. For those with a bit of memory and history in the markets will remember Grah Finance. It was sold to, of all people, Bandhan Bank. Why? Nobody knows. Sunilji is also laughing, but I am sure he would have shed an unseen tear when that transaction was announced. Nevertheless, so this is the low ticket housing play, ladies and gentlemen, and it has doubled over the last 1 year of listing and is available at 916 rupees. We'll keep this thought in mind as well, and let me just while we are at it, see who are the institutional holders in India Shelter. So apart from promoters, you have SBI Life Insurance holding 4% stake, Nexus Opportunity Fund also holding 4%. In terms of Indian mutual funds, interesting. Okay, Axis Mutual Fund has just got in with 2.5% stake. You have Goldman Sachs Fund, the India play, having a 2.4% stake. This is very interesting. So we'll keep an eye out on this one as well. So Sunilji, from your side, 4 stocks so far: India Shelter, Uno Minda, Gabriel India, and NSDL. Now let's make it an Panch Pyare. Give us one more which you feel has value at this point of time, and serious long term quiet investors who like compounding rather than momentum can buy at current levels.
Shailji, so one such stock where I think there is still a lot of opportunity left out would be Bharat Electronics. It's not an unknown story. Bharat Electronics, BEL. It's not something which is unknown. It is not something which is new to the market. But the thought process which I have there is I see a shift of money happening, perhaps from the IT and the banking pack into a large cap compounding defense story. The free float, if I take of the top 10 IT companies, it comes to about 13 lakh crores. And that pocket is likely to grow in a single digit number, which is say 5, 7, 8%, whatever that number is. A 13 lakh crore of money is looking at an opportunity where money is likely to grow at a 20% compounding and a large cap opportunity with very limited concern on the growth. I see that kind of money shifting to companies in the league of BEL and shipbuilding companies where the business is likely to compound at more than 25% for the next 5 years. So if money is going to change its direction, hands from one pocket of low growth to another of a high growth, I think BEL could find a play in the minds of the institutional investors to maybe increase their allocation to this side. Having seen what we have seen during Operation Sindoor and the role that BEL has played, and with more and more localization rather than globalization, and the technology transfers which are happening from DRDO into BEL, BDL, etc., we have a long runway of growth for this kind of companies. So I think I met few other defense companies as well, and clearly the message was given about localization to the last decimal. So BEL will play a big role on that side. They've got orders coming from various multiple things, various multiple projects. So I think that's a thought process which I have, which can be a good, safe, long-term compounding story. That's what I would say, Shailji, at this point of time.
And ladies and gentlemen, even BEL is a 1:1 bonus. The price that you see of 364 is uh, something that has again compounded over the very, very long period. If you see the past 5-year performance of BEL, readjusted for stock price, it's a 10x, it's a 10 bagger. So what you see is almost 9 bagger in the last 5 years. So, and if you look at the all time high 432, that would make it a 10 bagger. That's the kind of wealth, ladies and gentlemen, people have created by holding on to quality stocks and, of course, riding that defense wave. There are many instances where Sunil ji and I meet with a lot of sensible and long term investors in Mumbai, and defense has been a very, very profitable theme as far as that particular group is concerned. Sunilji, there was one other micro cap, one other small cap that you had mentioned in defense. Would you want to elaborate on Apollo Micro?
Uh, yeah, Shailji, so market, at least on the defense side, many of these big large cap companies, whether it is a BEL or it is a BDL or maybe Garden Reach, Mazgaon Dock, they have got huge amount of order book with them. And this order book is now getting percolated down to the private sector defense companies. So I think Apollo Micro is one of the few mid-size or rather small-size private sector defense companies, which is a tier one supplier to Indian defense system. Now, being a tier one, they directly sell their products to the likes of defense companies and Indian Army, Navy, etc. So I think this company would have a long runway of growth as well, with more and more orders likely to be announced in future. Having stated that, Apollo Micro has had a long run up in the stock price in a very short period of time. So the valuation might not justify the price at the current juncture. But for an investor with a long-term perspective can do their homework, analyze the company in more detail, and take their investment call. So I think that's what is the thought process on Apollo Micro. I think it's a smaller version of a composite of BEL plus BDL plus solar industry. So it's a composite of all three companies, the smaller version of all three of them put together.
Okay, fair point. Time draws to a close, Sunilji. What an interesting conversation we've had today. But for the benefit of viewers, ladies and gentlemen, we will again recap the 6 stocks that Sunilji has mentioned. Now, remember 2 points. One, if you want to get into them, you need to consult an independent advisor for additional views. And more importantly, these are not momentum plays, these are portfolio stocks where you will make multiple returns provided you hold them for 5-7 years, and whenever they dip in value you should be adding more. So we'll start in the reverse format, ladies and gentlemen. Apollo Microsystems and BEL from the defense space is what Sunil ji has suggested for long term holders of equity. The broader theme in defense is very much intact, and many of these stocks, in particular BEL, have corrected fairly sharply from their most recent highs. BEL in particular is down somewhere like easily 7-8% from its all time high. Then you come back to the financialization of savings theme and look at India Shelter Finance as also the recently listed NSDL. Both these stocks offer great value, have good management, great runways, and of course bigger businesses in the future. So that makes it 4. And then from the auto ancillary space, 2 favorites, Shocker and sunroof maker Gabriel India, which recently announced a rejig of its business and is incorporating unlisted subsidiaries into its main business. and of course Uno Minda. So that is what we have time for, ladies and gentlemen, at this point of time. Sunil ji wants to add something. Let's give him the last word.
Well, yeah, thanks, Shailji, for getting me on the show. Thank you so much. It was a good discussion that we had. But for the listeners and the investors, please do your due diligence. These are few of my portfolio companies. Me, my clients, and my family members are invested in them. So, as a discretionary, as a disclaimer, please take care of what you are investing and make your own independent decision. Reach out to your consultant before taking any call. So, thanks, Shailji, and we look forward to a great market ahead. Let's keep the fingers crossed. Thank you
Sunil
so much
ji,
for being on the show.
it's always a pleasure to host you. Your calm, composed, and wonderfully researched stock picks are a delight for all long-term investors. I'm sure most of us benefit very well from your sage advice. Thank you for joining us, sir.
Thank you, sir. Thank you.
That, ladies and gentlemen, was Sunil Shah, fund manager at SRE PMS, talking about his stock picks and discussing in detail his expectations from the markets over the next 6 months. Thank you for watching.